Hello grade 9s, in this video I will be doing the general ledger T account of activity 19, trading inventory or trading stock. Now trading inventory or trading stock is an asset. That is what you sell, anything that you sell from your business could be called trading stock. So if your business sells refrigerators, then refrigerators will be trading stock and it's got a certain value. Okay, so just explaining what happens in this account. Because it's an asset, assets normally increase on the debit side, which means I'm getting more trading inventory. If I'm selling my trading inventory, I'm going to put it on the credit side. So that's what's happening here. We're selling our trading stock. Some of it we're selling on credit through the DJ. We write it up in the DJ. And some we sell for cash and we write it in the CRJ. Now trading inventory is showed at cost price. So that is why the other account that goes with trading inventory is cost of sales. The cost of the things that we are selling, is trading inventory or trading stock. That's why these two goes together. Okay, and trading inventory normally has an opening balance, or assets normally have an opening balance on the debit side of an account. Now the left hand side is the debit side and the right hand side is the credit side. It's always like that. Okay, so if I get more trading inventory, I put it on this side, or if I have trading inventory, I put it in the beginning of the month, I put it on the left hand or debit side. If I sell it, I put it on the credit side. Okay, so where do I get this information? The 75,000 opening balance for the beginning of March I will get from my question on page 52. And you will see there the stock value is 75,000. Okay, so that's the value of the trading stock that I've got in my business. Then what happens in this account, I have to go to the DJ now. Now the DJ is where I'm selling trading stock, but I'm selling it on credit. Okay, people pay later. So cost of sales, I'm looking for the cost of sales account, and well, I'm doing trading stock, so trading stock goes together with cost of sales. So in this column we will only see cost of sales, but you must know when you see cost of sales, you know it's a cost of the trading stock. So the other account that goes with cost of sales is always trading stock. Always a debit account and a credit account. Okay, we're doing the trading stock account at the moment, or trading inventory account at the moment. Okay, so I'm just going to write here inventory as well so that you don't get confused. Okay, and trading inventory will be credited. Why? Because trading inventory is an asset and my asset decrease when I'm selling it. Okay, so I'm selling the trading inventory, so therefore 23,685 will be on the credit side. The other account is cost of sales. Trading inventory or trading stock is credited and cost of sales will then be debited. So the whatever account I put below the line, below the T, that's the T, below the T, that account, if it's below the line on the right hand or credit side, it means that account will actually be debited, but this amount goes together with whatever's at the top there. So trading inventory is credited and cost of sales is debited, and that's therefore you'll see it if we go to a cost of sales account, you'll see the amount on the debit side but cost of sales at the top. You can see that these two are reversing. Trading inventory at the top, cost of sales at the bottom, but 23,000 on the credit side. Over here, cost of sales at the top, trading inventory or trading stock at the bottom, but now we've got 23,000 on the debit side. So you'll have a debit side 23,000 and you have a credit side 23,000, a debit and a credit. That's balancing and accounting. Okay, so back to trading inventory, the account that we actually are doing in this video, and it gets credited. Okay, and we sold Why is it DJ? Because this trading inventory that we sold on credit. Okay, but we can also sell trading inventory for cash, and therefore I have to go and look in the CRJ. But which account am I going to look for? I'm selling the trading inventory. So which column am I going to look for? I'm going to look for cost of sales. Okay, so there in the cash receipts journal, there's a cost of sales account, and what goes together with cost of sales? Okay, trading stock or trading inventory. Okay, so if cost of sales as an expense gets debited, trading inventory gets credited, or trading stock gets credited. Why? Because I'm selling this trading stock. So if you're not sure what to do with cost of sales, ask yourself what happens to trading stock or trading stock or inventory. Okay, trading stock or inventory. Okay, so there you will see 60,000 on the credit side. Now normally this trading inventory that we sold to credit customers in the DJ, some of them can be unhappy with it and they bring it back, and then we go to the DAJ. So I'm just going to go look at the DAJ and see what we find there. Under cost of sales we find nothing in this case. Why do we find nothing? Because this 900 Rand that goes, these two columns goes together, but this was just an overstatement. You put too much on the invoice, and that's why we get a debtor's allowance. But the cost price of these 900 Rand is not affected, and therefore we wrote nothing in cost of sales here, and therefore we don't credit cost, we don't debit trading stock like we would normally do, because it's a zero amount, so it will affect nothing. We could have written in here, if we wanted to, we could have written okay, a zero there, but it would have made no difference to this account. Okay, so now which side is the biggest? The debit side is the biggest. Okay, so we leave lines open, and we put the 75,000 at the bottom. Okay, we add, so we put 75,000 on the credit side as well, and therefore this 34,000 is a balancing figure. Okay, so we take the 75,000 minus the 23 minus the 16, and then we are left with 34. So in essence what happened, we had 75,000 worth of trading stock, we sold 23,000, we sold another 16,000 worth of trading stock, and we are left with 34,000. So the left hand side was bigger by 34,000, and therefore at the beginning of next month I'm bringing back or down this 34,000 to the debit side, and the 1st of April I've got 34,000 trading stock available in my business. Okay, so that was trading inventory account.